Hey guys, welcome back to another episode of US stock market technical analysis. In today's episode, which is episode 20, we'll be taking a look at the US stock market, specifically technical analysis on the US stock market for the month of May 2021. When I take a look at the US stock market, I take a look at the three main indexes, the S&P 500, the Dow Jones and the Nasdaq. If you're interested in this kind of technical analysis videos and stock market videos, you can subscribe to my channel so that you don't miss out on all of these videos. Alright, we'll begin with the S&P 500. If you take a look at this chart for the S&P 500, going all the way back to end of last year, around October to November, you see that we are on a very clear uptrend. Prices follow a wave-like motion and generally prices have been rising. When prices are making higher lows and higher highs, we say that the stock, or in this case the market, is on an uptrend. A point to take note is that even though prices are on an uptrend, this doesn't mean that prices will rise each and every single day. There'll be days where prices move up over here. So in this case, this is an impulsive wave. So an impulsive wave is when prices move up generally. And when prices fall, we have a corrective wave. So this is a corrective wave. Another impulsive wave, corrective wave, impulsive wave, corrective wave, and another impulsive wave. So just by taking a look at this wave-like pattern that the S&P 500 is forming, as of the filming of this video, which is the start of May 2021, we see that prices are on an impulsive wave. And this impulsive wave that we are experiencing right now have been longer than the other impulsive waves. On top of that, prices have also moved quite a fair bit on this impulsive wave. We see that for the S&P 500 on this particular impulsive wave, the extent of the price movement and the duration is relatively stronger and longer than compared to previous impulsive waves. This green line indicates the moving average. In this case, the moving average that I'm using for this example is the 50-day moving average. And if you take a look at this chart, generally prices have been respecting the 50-day moving average. We see prices retracing to the 50-day moving average and bouncing back up from there. It retraces to the 50-day moving average, then prices found support at the 50-day moving average, and then it bounced back up, retrace, found support at the 50-day moving average again, and bounce back up. So the 50-day moving average has acted as a strong support for prices for the S&P 500 in the past few weeks and months. Currently, we are here. And you can see that at this price level, prices are a bit overextended away from the 50-day moving average. The distance between the 50-day moving average and where prices are currently at is quite far. So that's another way to determine whether prices are a bit overextended right now. The first way, which we have went through earlier on, is seeing how prices follow a wave-like motion. So in a wave-like motion, there are impulsive wave and corrective waves. And right now for the S&P 500, we are on an impulsive wave. And for this particular impulsive wave that we are currently on, the extent of the price movement for this wave and the duration of this wave have been relatively stronger and longer than compared to previous impulsive waves. So that's the first sign that prices might be a bit overextended right now. The second sign is that at the current price level, there's quite a bit of distance between prices and the 50-day moving average. This also indicates that prices are a bit overextended right now. Based solely on the technicals, there's a higher probability that prices might move sideways and consolidate for a while compared to the probability that prices will continue to rise. And take note, we are comparing the probabilities. Based on my analysis, this doesn't mean that prices will move sideways or decline with 100% certainty. What I'm trying to say is that there's a higher probability that prices might do one of these two things versus the probability that price will continue to rise. And that is what investing and trading is about. It's about aligning probabilities such that these probabilities are played in your favor. That's the daily time frame for the S&P 500. Now let's go on to the 1 hour time frame and we'll bring on the technicals. So if we zoom out a bit over here, on the 1 hour time frame, we see that prices are moving sideways and trading in a range. And this range is defined by the upper head resistance and the lower support level. Basically, prices have been trading within this area for the past few trading sessions. So we see for the lower area as indicated by this green rectangle, prices have found support over here once, another time over here, another time over here. Prices have tested this price zone at least 3 times. And when prices test this price zone 3 times, we can say that that price zone is a good support level or support zone. And if we take a look at the price zone above, prices encountered resistance above. So this is the first test of the resistance, and prices did not manage to break above the resistance. This is the second test, and then this is another test over here. Support and resistance are not specific price levels. Rather, they are more of price zones. On the 1 hour time frame, prices are facing significant resistance above head and encountering a strong support below. And that is why prices are trading in this range for now. So on the 1 hour time frame, prices might continue to trade sideways for a while or even decline back to this level over here. And then when it reaches this level over here, there will be a strong support for prices at that level. If the support level does not hold for prices over here, then this could mean further downside for prices for the S&P 500. If prices manage to find bullish momentum and break above this resistance, then I want to see prices finding support at the old resistance level and continue to move up over here. That's my technical analysis for the S&P 500. If you have enjoyed and learned something from this video so far, do take 1 second to smash that like button because it will really help the channel grow and allow me to produce more content such as this. The next index that we'll be taking a look at is the Dow Jones. So let's go on to the daily time frame, and then we clear the technicals first. For the Dow Jones, the chart also looks very similar to the S&P 500. The Dow Jones is on a clear uptrend, forming higher lows and higher highs. And we also see the Dow Jones following a wave-like motion. So this is the impulsive wave, corrective wave, impulsive wave, corrective wave, impulsive, corrective, impulsive wave. Even if prices are on an uptrend, this doesn't mean that prices will increase every single day. Prices can decline and experience a corrective wave and still be on an uptrend. Over here we see corrective wave, and over here also another corrective wave. But this doesn't mean that prices are no longer in an uptrend. This kind of corrective waves are part and parcel of an uptrend. And corrective waves tend to happen when prices have been on an extended impulsive wave. So over here we see quite an extended impulsive wave, and then we experience a bit of a corrective wave over here before prices go on to another impulsive wave. So when prices experience an extended impulsive wave, prices tend to do two things. The first is that prices can decline and move into a corrective wave. The second is prices might take a breather for a while and move sideways. So if you take a look at the chart for the Dow Jones is doing the second thing. That is that prices are taking a breather and moving sideways and consolidating for a while. You'll see that in the past few trading sessions, prices have been moving nowhere. So basically moving sideways. Moving forward, similar to the S&P 500, I believe that there's a higher probability that the Dow Jones will move sideways or decline a bit compared to the probability of moving up. If prices do decline, then an important support level that I'll be taking a look at is around this price level of $331. At this price level has been proven to be a key price area. If we take a look at the left side of the chart, this price level, prices encountered some resistance over here and over at this point over here. And after prices broke above this price level, instead of the resistance, prices now find support at the level. That price level of around $331 is a key price level that I'm taking a look out for if prices do decline from here. In a couple of trading sessions, when the 50-day moving average catch up with prices, the 50-day moving average will also be around at this price level of $331. And based on the past few weeks and months of trading, we see that prices have found support at the 50-day moving average. In the coming trading sessions, when the 50-day moving average moves to the price level of $331, there will be key support at this area. Because firstly, this price level has proved to be a key area. And the second one is when the 50-day moving average moves to that price level, the 50-day moving average will also act as a support level. And that is why I'm looking at the 331 price level to be a key area of support if prices for the Dow Jones do decline to that level. Now let's take a look at the 1 hour time frame, and then we'll bring on our technicals. Over on this 1 hour time frame, we see that the Dow Jones is clearly trading in a range. So this is the upper head resistance and this is the support level below. Prices encountered resistance over here, bounced back down to the support level, found support, then bounced back up, encountered resistance, fall back down and found support, went back up again, encountered resistance, and now basically is trading within this range. So moving forward, prices can continue to trade within this range, or if prices do manage to break from this range, then we want to pay attention to where prices break out from. If prices break out from the upside, then we want to see prices finding support at the old resistance level and then continue to move outward from there. But on the other hand, if prices break from the downside, then the old support might become a new resistance and then prices might fall from there. That's my technical analysis for the Dow Jones. Now let's take a look at the Nasdaq. So we'll go on to the QQQ, clear the technicals, and go on to the daily time frame. For the Nasdaq, prices have been a bit more volatile in the recent weeks and months. Back in around February, we see the Nasdaq declining by quite a fair bit, around a 10% decline in prices. But towards the later part of February and the start of around April, the Nasdaq has been moving up by quite a fair bit. In fact, on 13 April, the Nasdaq managed to make a new high over here. But since then, prices have been basically trading in a range. The previous high was at this price level around here, so it's around $338. And we see that at this price level of around $338, we see that prices have been holding up quite well at this price level. And as long as prices continue to hold up at this price level, prices can continue its upward momentum. But I believe that in the coming trading sessions, barring any unexpected news, prices will continue to move sideways for a while. And then once it managed to catch its breath, after this huge upwards move, prices can continue its bullish momentum. Let's go on to the 1 hour time frame and bring on the technicals. We see that for the 1 hour time frame for the Nasdaq, similar to the two other indexes, the S&P 500 and the Dow Jones, prices for the Nasdaq on the 1 hour time frame is also trading in a range. And this range is indicated by this green rectangle over here. and this green rectangle over here. The upper green rectangle serves as the resistance, and the below rectangle serves as a support for prices. And as we have mentioned earlier on the daily time frame, this price zone of around $338 or $337 is a key level of support for prices. And as long as the support continues to hold prices up, then even though prices might trade sideways for a while, and maybe after that the bull starts to take charge of prices and push prices to the upside to break above the resistance, find support over here, and continuing to move to the upside. But that is based on the premise that the key level of support at around $338 holds up. If the level of support does not hold up, then we can see prices breaking below that support level and move to the downside from there. And then the next level of support that I'll be taking a look at is this price level of around $328. That's my technical analysis for the US stock markets as a whole. If you have liked this video, smash that like button and subscribe to my channel because I have more videos on investing, trading and the stock market in my channel. I will see you in those other videos to your financial success.